We have an excellent question here from Michael, asking about a current trade we have running in the Aussie Kiwi, asking whether we should consider maybe closing down the trade, seeing that the recent risk of sentiment has seen some downside. We've seen some downside in the Aussie, more so than compared to the Kiwi. We also had other short-term factors, of course, also pressuring the pair. We had the Aussie GDP coming in worse than expected, and comments from the RBNZ governor or regarding the Kiwi strength playing against that position. So Michael's question is, should we close the trade and look for a possible lower or better entry to get back into the trade? And I think this is a really great question, Michael, and one that we can discuss, I think, in a more broader or general sense as well, maybe including it as a general guideline, and not just specifically for the Aussie Kiwi. So when it comes to swing trades like these, or more medium term trades in general, there is always going to be the possibility of that short term catalyst and sentiment shifts that basically pushes and pulls against the trade, or in our favor of the trade. Now, the big question comes in, like you said, do we close this trade and wait for better entries, or do we hold such a position? And I think it comes down to the reason why. Firstly, the reason why we're entering, but also the type of breathing space that we've given the trade. So, when we had the short-term sentiment shifts coming out against this particular trade, I thought that the overall fundamental bias still remains to the upside, and I still think it does. So I am happy to hold the trade, or trades like this, as long as I think the original premise for entering is still valid. Because the challenge that we face with closing it and looking for a better entry is that we never know how far it might go against us before it starts to move in line with the longer term trend again. We might see it come down lower, but seeing that the fundamental bias is still tilted higher, we also might not. So it's a little bit of a 50-50 chance. Leave it, we might see it eventually hit our stop and take us out, and then we could have entered at a better price. Or it might just continue moving higher in line with that sentiment. So the challenge really comes down to whether the short-term catalysts are enough to push it lower. And then if it does, how far do we allow it to go lower before we enter again? And for me, the longer term trades like this, as long as I think the stop loss is in place where I feel I'm comfortable with the trade, that it has room to breathe, I will just leave it be. Unless, of course, a short term catalyst comes along that changes the medium term premise for the trade. Then I would, just close it out and wait for another possible entry opportunity when the bias changes to the upside again, if that makes sense. The other thing to also consider, is just the overall price action. On this example, we've had a couple of attempts at that 109 area. If we drop down to the lower time frames, let's go to the 1 hour, for example. We've had a couple of attempts at that 109, and every time that we managed to break above it, we've just been pushed back lower. And now we've had a nice clean break of that level. And from a price action point of view, now that we're above that level, I would like to see it stay above there. It doesn't mean that I'm going to close it if we do break below this. But, if we, after that attempt at 109, if we see a strong price action breakdown, breaking through these overall support areas that we've highlighted on the chart, basically, going back to those daily levels we marked out, those daily areas of support. If we see it now clear these levels strongly to the downside, then for me, that's a very strong price action signal that the markets maybe the timing isn't right for this market to go higher. So we do need to keep that in mind as well. I think the most frustrating thing we get is we might not see it go anywhere meaningful. We might see it just stay in this range bound move until it eventually either goes in our direction, or it moves sideways for long enough for the actual medium term bias to change to the downside, and then it goes lower again. So there's really no way of knowing. I think the pain trade here is that it just does nothing. It just stays in that range for a while. But as we said, let's look at the price action. Always look at the price action as well. So look at the premise, whether that has changed. Look at the time horizon, the stop loss. Have you given it enough time, space to breathe? And then the price action. So key takeaway is whether the trade has enough room to breathe based on the timeline that you're trading in, whether the short-term catalysts are enough to change the medium-term outlook or that premise, and then whether the price action is supportive of the pair indeed moving in your direction. I think as long as those three things are still in place, I'm happy just to hold it, if that makes sense. The other thing, also to keep in mind is, whenever we take trades, we always make sure that, unless it's something that we leveraged on for a reason, most of these types of trades will be unleveraged. So, even if we don't close it and we do hit the stop, it's a managed risk on the trade. If we do see a clear change in that sentiment, if we can take a smaller loss, of course, that'll be great. But as long as those three things are in place, I'm okay to let it be, and just let the trade play out. So I hope that helps with the question, Mike. If there's any other questions, as usual, please don't hesitate to let us know.